Hello and welcome to Web3 Diaries. I'm your host, Roshni Shingre.
Hello, I'm your host, Shaka Singh, giving you your daily dose of news snippets from the Web3 universe.
Hello and a very warm welcome. I am Ruchi Sharma. Let's start the news for today. Tron staking continues to decline over the past week, and the data from sentiment was not likely to inspire confidence in investors. However, the price action showed bullish signs, and lower time frame bulls can look for trade opportunities. TRX clocked 9% increase last week, while Bitcoin added 5% during the same period, but the most popular cryptocurrency witnessed increased volatility as compared to TRX. A drop in BTC prices is likely to pull TRX lower as well. If BTC remains stable or posts gains, TRX will also move upward. The market structure of TRX has been bearish on the daily time frame after the move below $0.066 on 7th March. Since then, the price set a series of lower highs, with the most recent one being the $0.067 level. On 29th April, Tron bulls forced a daily trading session close above this level, thereby flipping the structure to bullish. The RSI was above neutral 50 and stood at 61 to show strong bullish momentum. The break in market structure indicated further gains were possible. A look at the 4-hour chart showed a bearish order block in the $0.067 to $0.0677 area. On 30th April, this block was broken and retested as support on 1st and 2nd May. This confirmed that the bearish OB was flipped to a bullish breaker, another sign that TRX was poised for a move upward. The OBV climbed upward over the past week, but this was not explosive. In 2023, there were times when TRX surged sharply and was accompanied by a spike in the OBV. Traders can watch out for another such spike. The developer activity has been in a slump over the past 10 days, even though TRX rallied from the $0.064 support level. Weighted sentiment was also negative despite recent gains, and the funding rate showed short positions were in the majority. The price action showed that the $0.07 and $0.072 levels of resistance can oppose the bulls. On the other hand, a daily session close below $0.0667 will flip the structure in favor of the bears once more. Over to you, Roshni.
Bitcoin prices may be finding it difficult to break through trading range, but that is hardly a dampener for miner or related activity. Bitcoin blockchain involving Ethereum-style tokens and non-fungible token like inscriptions has driven up congestion on the network, pushing the average fee rate to the highest in nearly 2 years while showering miners of the cryptocurrency with extra revenue. On Wednesday, the average fee per Bitcoin transaction rose to $7.25, the highest since July 2021. For comparison, the rate so far this year had fluctuated between roughly 50 cents and $4. Data from Bit-Info chart shows. With transaction activity also surging, total fees on Bitcoin also have jumped. Per blockchain analytics firm Glassnode, Bitcoin's total transaction fees, which are paid by users to miners, jumped to around 124 Bitcoin or roughly $3.5 million on May 3rd, representing a 484% increase in the past 14 days. In recent times, a token type called BRC20, a play on Ethereum's ERC20 token standard, which facilitate the issue and transfer of fungible token on the Bitcoin blockchain, has accounted for about 6% of all Bitcoin activity since its inception in early March, according to pseudonymous analyst and yield farmer Dynamo DeFi. This year has also seen the rise of ordinals inscriptions, which are similar to NFTs and could be image or text strings inscribed into Bitcoin-based transaction. Both activities require transaction fees. Miners who secure and maintain the Bitcoin network are beneficiaries of the recent increase in Bitcoin transaction fees because they are rewarded in Bitcoin fees for processing users' transactions. The average transaction fee on Bitcoin is $7.25 according to data website cryptofees.info. Bitcoin's 7-day average fee stands at roughly $2 million, second only behind Ethereum's $12.5 million. Over to you, Shikha.
FTX Group is making moves to take back nearly $4 billion in cash and crypto from defunct lender Genesis Global Capital and its affiliate GGC International. According to court papers filed on Wednesday, these funds include almost $2 billion in loans and collateral handed to GGC by Sam Bankman-Fried's Alameda Research and more than $1.62 million that was withdrawn from FTX by the two firms before it went bust. As detailed in the papers, Genesis was one of the main feeder funds for FTX and instrumental to its fraudulent business models. At one point in 2021, GGC had over $8 billion of outstanding loans to FTX debtor Alameda Research Limited. Unlike other FTX creditors and customers, Genesis was largely repaid. As reported by Bloomberg, FTX is using bankruptcy rules originally laid out to make sure that certain creditors don't receive preferential treatment. Obviously, if FTX does manage to claw this $4 billion, it will have a knock-on effect that could spell bad news for Genesis Global's creditors. Among these is the Winklevoss twins crypto exchange Gemini. Late last year, it was reported that users of the company's Gemini Earn product were owed up to $900 million by GGC and its parent company Digital Currency Group. In December, the Winklevoss twins formed a committee of creditors to help recover lost funds. However, as pointed out on social media, if FTX has its way, it could scoop up a Gemini Earn customers' cash before they see a cent. That's it in today's special segment. For more such updates, keep watching Twitter.tv. Do not forget to share, subscribe and like our channel. For more such updates, press the bell icon.